In this video, we look at the holdings of some major metals ETFs. Canadian Mining Report is not a financial advisor. This video is for informational purposes only and does not constitute investment advice. The main ETF for the largest gold producers is the GDX, VanEck's gold miner ETF, and is a reasonably pure play on the gold sector, with a heavy concentration in 10 of the leading global gold mining giants, which comprise 61.8% of its total holdings, including Newmont, VanEck, Franco-Nevada, and Agnico Eagle, which all have market caps over $30 billion US, with the market caps of the rest of the top 10 below $8 billion US. The major junior gold ETF is the GDXJ, VanEck's Gold Junior Miners ETF, which is less concentrated, with the top 10 accounting for only 41% of its total holdings, with the market cap of the top 10 starting just below $8 billion US, or roughly at the bottom of the GDX top 10. One of the major silver ETFs is the SIL, the Global X Silver Miners ETF, which has almost a quarter of its holdings in Wheaton, which is also by far its largest market cap holding, and a big driver of the larger concentration of its holdings in the top 10 at 76.1%. Wheaton is a streaming and royalty company with a large contribution from gold and other metals as well as silver, which accounts for its inclusion also in the GDX. The SIL also has 4 crossover holdings with the GDXJ: Pan Am Silver, Industrias Panolas, SSR Mining, and Hecla Mining, indicating that the SIL is not such a pure silver play, with substantial contribution from the gold sector, and that the GDX is also not such a pure gold play, with a reasonably large contribution from silver. One of the major silver juniors ETFs is the SILJ, the ETFMG Prime Silver Junior Miners ETF. But again, here we see considerable crossover of holdings with the SIL, with both ETFs having 5 of the same top 10 holdings: Pan Am Silver, Hecla Mining, SSR Mining, First Majestic Silver, and Mag Silver. The market cap size for the SIL and SILJ beyond these 5 are reasonably similar, in contrast to the large market cap gaps between the GDX and the GDXJ, so there seems to be less distinction between these two ETFs in terms of majors and juniors. This will partly be because the SIL and SILJ are from 2 different companies, Global X and ETFMG, which will have different definitions and construction, while both the GDX and the GDXJ are from the same company, VanEck. The major ETF for copper miners is the Global X Copper Miners ETF. While 3 of its largest holdings, BHP Group, Teck Resources, and Glencore, are diversified giants producing other metals in addition to copper, the ETF is less concentrated in the top 10, at just over 50% of its holdings, and most of its other top holdings are almost entirely focused on copper, indicating that it still can be considered a reasonably pure play on the metal. The major lithium stock ETF, the Global X Lithium and Battery Tech ETF, is less of a pure play on the lithium miners, with several top holdings either diversified conglomerates like Panasonic or TDK, or electric vehicle companies like Tesla, BYD, and Rivian, which combined are 25% of the holdings. So it's a broader play on the electric vehicle sector, electric vehicle battery production, and lithium. For more on the metals and junior miners, click the link in the description or bio below to go to www.canadianminingreport.com.